Good afternoon. I hope you are fine. Please come to one question. I am going to dictate. So, dear student, please write down one question. Dear student, please write down one question. Write down. Mr. Harsh provides the following details. Mr. Harsh provides the following details relating to his holding in 10% debenture bracket face value rupees 100 each, face value of rupees 100 each of X Limited held as current asset. So write down 1st April 2018. 1st April 2018, write down opening balance 12,500 debenture, cost rupees 12 lakh 25,000. Cost rupees 12 lakh 25,000. 1618, write down purchased 9,000 debenture, at rupees 98 each, X interest. One 2018, purchase 12,000 debenture at rupees 115 each cum interest. Sold 31st December 2019. Sold 13,500 debenture at rupees 110 each. Cum interest. 31st March 19. Market value of debenture at rupees 115 each. Due date of interest 30th June and 31st December. Due date of interest 30th June and 31st December. Brokerage at 1% is to be paid. Brokerage at 1% is to be paid for each transaction. Brokerage at 1% is to be paid for each transaction. Brokerage at 1% is to be paid for each transaction. Mr. Harsh closes his books on 31st March 2019. Mr. Harsh closes his books on 31st March 19. Show investment account as it would appear in his books. Assuming FIFO method is followed. Assuming FIFO method is followed. Assuming FIFO method is followed. So what is the important extra adjustment in this problem? Brokerage has come in the question. Brokerage has come in the question. Otherwise, the problem was similar to the previous two questions that you have solved. Hopefully, you have written the question. Now, all of us will read it together. Mr. Harsh provides the following details regarding to his holding in 10% debenture. So, interest rate is 10%. Face value is rupees 100 each of X Limited held as current asset. This is opening balance given to you. Number of debenture 12500 and this is the cost. Then there are purchase, and then there is one sale. Two purchases and one sale. Two purchases and one sale. Sale is after the purchases 13,500. So since you are going to follow FIFO method, this 13,500, first you assume opening lot will be sold, first in, first out, and then out of this 9,000, you will assume 1,000 is sold out of 1618. Out of 1618. So this way, we will assume that this 13,500 units sold, the source is opening balance plus the investment purchased on 1618 if you are following the FIFO method. Next issue in this problem is there are two interest payment dates, 30th June and 31st December. If they give you market value of debenture also, then you apply cost or fair value, whichever is lower. So I will check at the end of the year which is lower, cost is lower or fair value is lower. Interest will be paid on 20th June and 31st December. But what is new here? Brokerage. Brokerage is 1% is to be paid on each transaction. 1% of what is not given. 1% of what is not given. So what I'll do, first we will write down note. Write down in the answer note, it is assumed that brokerage is paid on X interest amount. It is assumed that brokerage is paid on X interest amount. Second note, write down. Note number 2, this is 1. When investment is purchased, brokerage is added to X interest amount. Brokerage is added to X interest amount. Note number 3. When investment is sold, please be present every day so that you will understand what is X interest, what is cum interest. Okay. When investment is sold, X interest is brokerage is deducted from X interest amount. Brokerage is deducted from X interest amount. Brokerage is deducted from X interest amount. X interest means excluding interest. Cum interest means including interest. So I hope you have noted down these 3 points. So now we are ready to solve this wonderful question. So first what the student should do, they should prepare this investment account format. Write down books of name of the company is, or name of the person is Mr. Harsh. Investment account for the period from, the period covered is 1/4/18 to 31st March 2019. 1/4/18 to 31st March 19. Then the name of the security is, name of the security, write down 10% debentures. Face value rupees 100 each. Face value is rupees 100 each. Now you will kindly draw this format fast. Please draw the format fast. Once your format is over, you will message me done. Okay, tell me done. Those who have done, yes, please let me know once you have done. Everybody, draw one page 20-25 lines format. Draw 20 to 25 lines format. Draw 20 to 25 lines format. Is it over? Once your format is over, then we can solve the problem easily and quickly also. This question has one new adjustment, and that is your brokerage. So after this, you prepare first working note 1. Prepare this working note 1, which I will call it as purchase and sale of investment. Purchase and sale of investment. Only the first working note at the top you will draw. Only first working note at the top you will draw. Everybody has done the format. Very good. I am glad. So this time this format has 10 columns. Date, interest accrued. Under interest accrued you will write from to number of months. Then face value, X interest amount, interest at the rate of 10% per annum, interest at the rate of 10% per annum, come interest, and you add one more column there, brokerage at the rate of 1% on X interest amount. Brokerage at the rate of 1% on X interest amount. Last column is net amount. Net amount will be equal to X interest amount plus minus brokerage. X interest amount plus brokerage, if you are purchasing, X interest amount minus brokerage when you are selling. Note has already been dictated to you. Is it right? So only draw the first format right now, only up to this. This is one main format. Once this is done, then my task will be very easy. Okay? So those who have done this format, please tell me that yes, we have done the first working note format. So most of you have done. I am very happy. So start with purchase first. Question is in front of you. There are two purchases. First purchase is on 1/6/18. 1/6/18, and the date of purchase is 1/6/18. Interest due date is 30th June and 31st of December. So interest will accrue from 1st January 18 to 1st June 18, and that is 5 months. Interest has started accruing from 1st January to 1st June, 5 months. And what is face value? Face value of this is 9,000 debenture means 9,000 into 100. 9,000 into 100 is 9 lakh. Correct? 9,000 is 9 lakh. Let us check whether it is purchased ex interest or cum interest. So it was purchased ex interest. 9,000 into 98. 9,000 into 98. Multiply 9,000 into 98 is 8 lakh 82,000. 8 lakh 82,000. Next, we have to now do some calculations. So, dear student, first tell me interest at 10% on 9 lakh. Please remember, we will calculate interest on face value at 10%. Every time 9 lakh into 10%, and then number of months you take it from here. 5 months into 5 by 12 into 5 by 12. So the answer is interest will be equal to 9 lakh into 10% into 5 by 12, 37,500. 37,500. So come interest amount will be add 9 lakh 19,500. 9 lakh 19,500. Now wait a minute. You have to calculate now brokerage. Brokerage will be calculated on X interest amount. 8,82,000 is X interest amount into 1%. Into 1% calculation is very easy. 8820. You can just remove the last two zeros. 8820. Now, how much amount will you capitalize in your book? The investment will be capitalized at 8,82,000 plus brokerage 8,90,820. 8,90,820. Very good, Jyoti Jha. Aniket Dange, Kunal, working hard. Others are hardly working. Ha ha ha. Some are working hard, some are hardly working. Next purchase was made on 1/11/18. Next purchase was made on 1/11/18. So next purchase is made on 1/11/18, and the date will be up to 30th June. Interest has been paid. So the accrual will start from 1st July 18 to 1st November 18. July, August, September, October. July, August, September, October. 4 months. July, August, September, October. 4 months. Now check how many units of debenture were purchased. 12,000 units were purchased into 100 rupees. 12,000 into 100 will be 12 lakh. Will be 12 lakh. Face value is 12 lakh. Now read the question and check whether it was purchased on X interest basis or cum interest basis. So you will find it is 115 cum interest. Multiply 12,000 into 115. In the cum interest column, 12,000 into 115. Cum interest column, 12,000 into 115. Yes, come on, answer. 12,000 into 115, 13 lakh 80,000. Very good. 13 lakh 80,000. 13 lakh 80,000. 13 lakh 80,000. Now we have to find out interest. Interest will be calculated on face value. Everybody take your calculator. Type 12 lakh. 12 lakh into 10% into 4 by 12. 12 lakh into 10% into 4 by 12. So your interest figure is how much? Interest figure is 40,000. Do the reverse working. 1380 come interest minus interest 40,000 is equal to X interest amount. So the X interest amount will be 13 lakh 40,000. X interest amount will be 13 lakh 40,000. X interest amount come interest minus interest is X interest. Okay, be present every day and revise, then you'll understand. So interest we have computed, come interest, X interest. Brokerage will be 1% of X interest amount. So tell me brokerage now. Brokerage is 1% of X interest amount. So brokerage will be 1% of 13 lakh 40,000. 13400. Brokerage amount is 13400. Add X interest amount and brokerage you will add, these two figure you will add, then you will get this amount. That is the amount of investment that you need to capitalize. So any answer for that? X interest plus brokerage equal to X interest plus brokerage equal to 13 lakh 53,400. These are the two purchase entry. When you will record the investment, you will record this amount. Please remember, we will record after adding brokerage. AS 13 says brokerage will be part of the cost of investment. And while recording interest, you will record this interest figure. Okay. So I will ask you, you will give me this figure. There is one sale transaction also. Sale transaction is on 31st December. Make it 18. 31st December 18. 31st December 18 in your question book, or in your question where you have written 31/12/19, it should be 18. Year date is 31/12/18, and the interest will start accruing from 1/7/18 1/7/18 to 31/12/18. 1/7/18 to 31/12/18, that is 6 months. And you have sold 13,500. So 13,500 into 100 is 13 lakh 50,000. And it was sold on come interest basis. Come interest 110 rupees. So go to come interest column. 13,500 into 110. 13,500 into 110. Come on, how much is that? That is come interest amount. That is come interest amount is equal to 14 lakh 85,000. 14 lakh 85,000 is right. Now calculate interest on 13 lakh 50,000 at 10% for 6 months. 13 lakh 50,000 into 10% into 6 by 12, that is 67,500. Now come interest minus interest will give you X interest amount. Please deduct 67,500 from 14 lakh 85,000, and that is equal to 14 lakh 17,500. 14,17,500 is right. Take brokerage 1% on that. Brokerage on X interest amount. So X interest amount 1417500 Brokerage will be 14175 in bracket. Sir, why in bracket? Because we are going to pay brokerage on sale also. So my net amount realized will be 1417500 minus 14175 minus 14175 minus 14175. Answer 1403325. 1403025. So this completes one important working note. Any query on this? Note I have dictated. Brokerage is to be added when you are buying the investment. Brokerage is to be deducted when you are selling the investment, because we have to pay brokerage on both the occasions, at the time of buying also and at the time of selling also. Okay, so now any query on this? Anybody, any query on this? Come on. No query? Please go to step number 2 or working note number 2 you can write. Interest received on investment. Interest received on investment. Which are the two interest payment date in this question? One is 30th June 18 and one is 31/12/18. Interest will be paid in June and December. Interest will be paid in June and December. Number of months will be 6 months, because interest are paid after every 6 months. Face value. What was the face value of the debenture outstanding on 30th June? My question to all of you is, what is the face value of the debenture outstanding on 30th June? What is the face value of debenture held by investor on 30th June? Please reply. Opening balance is 12,50,000. Opening balance is 12,50,000, and plus you have purchased this 9 lakh rupees, first one, plus 9 lakh. So that is equal to 21,50,000. That is equal to 21,50,000. That is equal to 21,50,000. So now you calculate 21,50,000 into 10% into 6 by 12. 21.50 lakh into 10% into 6 by 12. Interest, tell me interest. Interest received will be 1,07,500. 1,07,500. Anybody tell me now this figure? What was the face value of debenture outstanding on 31st December 18? Face value of debenture outstanding on 31st December 18. So what I will do, I will write it for you. Opening balance was 12,50,000, plus you purchase 9 lakh, plus you purchase 12 lakh. Two purchases were made, and minus you sold 13,50,000. So the answer is equal to 12,50,000 plus 9 lakh plus 12 lakh minus 13,50,000. So this time my answer will be equal to how much? 20 lakhs. Very good. So I have 20 lakhs of debenture on 31st December. Because you have already sold this investment, you will have to deduct it, 13,50,000. Now 20 lakh into 10% into 6 by 12. 20 lakh into 10% into 6 by 12. Come on. 20 lakh into 10% into 6 by 12. So that is 2 lakh and then half of it 1 lakh. This will be 1 lakh. Govind Thakur is right. Any query on this question? Till now. Only those students will ask query who are present from the beginning. Who are present from day 1 of this chapter. Step number 3, write down. Interest accrued. Interest accrued due date will be, first we will take the opening date 1/4/18 and then we'll take the closing date 31st March 19. Okay, interest accrued, due date, number of months, face value, and interest at the rate of 10%. And interest at the rate of 10%. So due date 1st April, opening balance, interest will accrue for 3 months. Sir, which 3 months? Sir, which 3 months? January, February, March 2018. Interest would have accrued for these 3 months. And the face value is the opening balance. Face value is the opening balance 12,50,000. So please tell me 12,50,000 into 10% into 3 by 12 into 3 by 12. 12,50,000 into 3 by 12. 12,50,000 into 10% into 3 by 12. So that will come to 31,250. 31,250. Very good. Those who have answered, very good. Now let us come to 31st March. Here also the interest will accrue for 3 months. January to March 19. January to March 19. Okay. What is the face value outstanding? See this 20 lakh on the left side. Step 2. After 31st December, you see there is no other transaction. After 31st December 18, there is neither purchase nor sale. If there is neither purchase nor sale, the same 20 lakh I can write as closing balance also. Correct? So 20 lakh into 10% into 3 by 12. That comes to 50,000. That comes to 50,000. First, you will have to learn to make this working note 1, 2, 3 in questions on debenture. Only with lot of practice you will be able to get it right. Lot of practice. Suyash Watway is right. Govind Thakur is right. Kunal Pancharia is right. Rajendra Pawar is right. Tiwari is right. Kartikeya Kaushik is right. Kirti is right. Okay. Vanjangi Shravan is right. These are the people who are regularly giving me answers. What about others? Are you sleeping? Tell me, are you sleeping? Or you are also writing the answer? So much comprehensive coverage is not there in any one place. I have covered all questions of study material, RTP, MTP, suggested answer, other good books also, reference books also we have covered. What more do you want? Please suggest. And in spite of that, you are not responding. Aniket Dange right, Jayashri right, Jyoti Jha right, Chaurasia right. Okay, so let us now calculate one more working note. Working note number 4. Working note 4, write down. Profit or loss on sale of investment. Profit or loss on sale of investment. Profit or loss on sale of investment. The right hand side two columns. Sumit Kundu, you're not sleeping. Then you should answer fast. First write down sale value. In bracket working note 1. You will write the X interest amount minus brokerage figure. Go to this working note number 1, last column here. Can you see 1403325? 1403325. This is your sale value after paying brokerage. 1403325. Last line, last column. So you write down here 1403325. That is sale value. Point B, cost. Cost will be calculated using FIFO method. Cost will be calculated using FIFO method. Under FIFO method, first in, first out. So first we will sell out of opening balance. First I will sell out of opening balance. The sale quantity is 13,500 units. Opening balance has only 12,500 units. So this entire opening balance will be assumed to have been sold. First in, first out. And the cost is given in the question is 12,25,000. We will not change this figure. Somebody can ask, can we add 1% brokerage to this also? We will assume this is final figure because it is opening balance. So last year it must have already been adjusted. But this is not enough. We have sold 13,500 units. We need to sell also 12,500 plus 1,000 is shortfall. So that I will sell from out of purchases. Out of purchases made on 1/6/18. Out of purchases made on 1/6/18. Out of purchases made on 1/6/18. So you have to do the proportionate calculation. Let us go to 1/6/18 purchase. In the last column at the top, right hand side, 890,820. 890,820. 890,820, and that is for purchasing 9,000 units. So divide by 9,000 units and multiply by 1,000 unit. Why 1,000? Because total 13,500. 12,500 is opening balance. So 1,000 is out of this lot. One question is, can we compute brokerage on cum interest basis? Yes, and you write a note accordingly. So now next point is, what is this amount equal to? So please take your calculator and type 890,820 into 1,000 divide by 9,000. So you will get 98,980. Total of these two items in the outer column plus 12,25,000. 1,323,980. 1,323,980. So tell me, point number C, you will tell me, then I will write profit or loss on sale. A minus B. Good student will answer profit or loss on sale of investment. Profit or loss on sale of investment. 14 lakh 3,325 minus 1323980. So the net profit is 79345. Net profit is 79345. Net profit is 79345. Kartikeya, Dhruv, Tanya, Aniket, Lucky, you are right. One more working note 5 write down. Valuation of closing investment. Valuation of closing investment. Valuation of closing investment. First, we will calculate cost using FIFO method. Using FIFO method. Right hand side rupees. A. How do you calculate the closing stock using FIFO method? Understand one more time. We had in the beginning 12,500 units. Then we purchased 9,000 unit. We purchased 12,000 unit and we sold 13,500 unit. This is what is given to us. So we will assume this 12,500 has been sold. Out of this 9,000, 1,000 has been sold. So what is remaining is 8,000 out of the purchases made on 1st of June, and this 12,000 is fully lying with us. So you will write down out of purchases made on 1st June 18. Out of purchases made on 1st June 18, that is your calculation will be 8,90,820. Same figure we have written here also. Divide by 9,000, but this time you multiply by 8,000. This will give you proportionate value. This will give you proportionate value. So we have total 20,000 units in the stock, you are right. Out of 20,000, 8,000 was purchased on 1st June. So can you give me the answer for this? Take on your calculator 890,820. Divide by 9,000 into 8,000. 791,840. Very good, Govind Thakur. And point B, out of purchases made on, what was the next date? 1/11/18. This is fully lying with us. This is fully lying with us. Where I will get the amount on the screen. This is the right hand side. See, 1353,400. This 1353,400 is the cost of the second lot purchased. 1353400. 1353400 in bracket write down step 1 or working note 1. Tell me the total of this. Total of cost of closing investment. Total of cost of closing investment. You will add these two number. You will get 21,45,240. 21,45,240. Below this write down. Close this table. Below this write down B. Market value. You have 20,000 units in closing stock. And now if you see the question, the market value is given 115. 20,000 units in closing stock multiplied by 115 is 23 lakh. Is it right? Check. Is it 23 lakh? Is the market value 23 lakh? Now we will apply AS 13. This is cost 2145240. This is market value. AS 13 says investment will be valued at cost or market value, whichever is lower. Therefore, closing investment will be valued at lower of the two. That is, write in very good handwriting, 2145 240. 2145 240. So for calculation purpose, I will take here lower of the two. When you will write the closing balance in your investment account, you will write 2143 240. So when I will ask you closing investment balance, you will give me this figure. When I will ask you profit or loss on sale, you will give me this figure 79345. Is it right? Jatin Gupta is right. Jay Shri is right. So we will now complete the answer. This is my main format. I hope all of you will follow me. 1st April 18. To balance brought down. Face value 12,50,000. Number 12,500. Amount is given in the question. First line 12,25,000. 1,418 to interest accrued. Working note 3. Go to working note 3. Go to working note 3. Check the interest accrued. Working note 3, right hand side below 31,250. Is it 31,250? Is it 31,250? Say yes. 31,250. 31,250 is right. You people are genius. Now next is we will write the purchases made on the debit side. 1,618 to bank. Working note 1. Purchases made. 1st June face value was 9 lakh. Number was 9,000. Amount was on the screen, working note 1, last column 890,820. 890,820, and the interest was second interest here 37,500. Interest is 37,500. Interest is 37,500. Is it right now? There is one more purchase. Write down that also. 11118. Everybody follow me. To bank. Again working note 1 only. And you have purchased 12 lakh rupees face value of debenture. Number is 12,000. Number is 12,000. Go to working note 1. Second line of purchase. Last column 1353 400 is the cost and interest is 40,000. 1353 400 and interest is 40,000. And interest is 40,000. So these are the two purchases made. Now on the credit side, we will pass entry for interest received on 30th June 18. Interest received on 30th June 18 by bank. Working note 2. By bank on the screen below left side. Interest received on 30th June is 1,07,500. Can you see 1,07,500? 1,07,500. 1,07,500. Then there was a sale transaction on 31st December 18. On 31st December 18, there was a sale transaction. So you will write by bank, sale, working note 1. You have sold 13,500 units, which means 13 lakh 50,000. 13 lakh 50,000. Go to working note 1, sale. On the screen, sale, last column 14 lakh 3,325 and interest is 67,500. So we will write down 14 lakh 3,325 and interest is 67,500. Working note 1. Working note 1. And on the debit side, write down 31/12/18 to profit and loss account, profit on sale. Working note 4. Please go to working note 4. Where is working note 4? Here on the right hand side corner, 79345. 79345. So write in the amount column 79345. 79345 is right. Then 31/12/18, we will receive second interest by bank, working note 2. Interest received. Interest received. So please go to working note 2 and tell me interest received. Interest received will be on the screen, working note 2 below, 1 lakh rupees in red font. 1 lakh rupees. 31/12/18. 31/12/18. Is it 1 lakh rupees? 1 lakh is right. Then we will write down 31st March 19 by interest accrued. By interest accrued, this is your working note 3. So let us go to working note 3, left right hand side below. 50,000 rupees is interest accrued. 50,000 rupees is interest accrued. So all of you please write down 50,000 rupees interest accrued. Is it right? 50,000 you've written. Now on 31st March 19, by balance carried down, face value will be 20 lakh, quantity will be 20,000, and the closing investment we have valued in working note 5. Closing investment we have valued in working note 5. So please go to working note 5 now. On the screen below, right hand side, 2145240. 2145240. 2145240. 2145240. And then write on the debit side 31/12/18 to P&L account, This interest you have to transfer to P&L account. So first you take the credit side interest total on the screen, add 1,07,500, 67,500, 1 lakh and 50,000 minus 31,250, 37,500 and 40,000. So this will give me net interest. Net interest, anybody which will be transferred to P&L account here. I am waiting for your answer. How much interest will be transferred? 216,250 is right. 216,250. 216,250. Now you take the total of all these columns and close. Take total of all these columns and close. Take the total of all these columns and close. Do it yourself. Ravi Mittal is right. Shubham Gorana. Shubham Gorana. You have given some answer 19,500. What was that? Farhan Azam 2,16,250 is right. Pawar is right. Pawar is always right. Pawar is king. This answer is over. Write down note. We can also calculate brokerage on cum interest price by writing a note. By writing a note. We can also calculate brokerage on cum interest price by writing a note. Second note, write down. It is assumed that opening balance in bracket rupees 12,25,000 is after adding brokerage. Hence, no further adjustment required. Hence, no further adjustment required. Hence, no further adjustment required. Hence, no further adjustment is required. So, this answer is over. Any query now on this question? So, that was an important question based on November 19 exam for 10 marks. This kind of questions are asked. As you can see, it is a 10 mark weightage. It is a 10 mark weightage. We'll go to one next question which is printed in our book. Question number 9. Question number 9. Please come to question number 9. Please come to question number 9. All of you will concentrate now. No need to write the question. Calcutta Investment has 412% debenture of rupees 100 each in Acme Limited as on 31st December 2010 at a cost of rupees 50,000. So this is opening balance. Number is given, face value is given, rate is given, cost is given. Interest is payable on, underline, two dates, twice a year, 30th June and 31st December each year. On 1st June 2010, like the previous problem, 200 debentures are purchased come interest at rupees 21,400. On 1st November 2010, 300 debentures are sold ex interest for 28,650. On 30th November 2010, 200 debentures are purchased ex interest for 19,200. On 31st December 2010, 300 debentures are sold come interest for 32,250. So you have to solve it very, very carefully. There are two purchases and there are two sales. One is at X interest price, one is at come interest price. Prepare investment account valuing stock on 31st March 11 by applying FIFO method. Oh, wonderful. We have FIFO method or market price, whichever is lower. The debentures were quoted at par. At par means 100 rupees. This is market value, 100 rupees on 31st March 11. Market value is rupees 100 on 31st March 2011. Any query on this question now? So FIFO method we have to follow. Opening balance is 400 units. Plus we have purchased uh, 200 units on 1st June, and plus we have purchased 200 units on 30th November. What about the sale? On 1st November we have sold 300. So that will go out of opening lot. First in, first out. And then 300 were sold here on 31st December. So what is the source of this 300? 100 out of opening lot and 200 out of second lot. Okay, so what is remaining? This will remain in your closing balance. Opening plus 200 purchased will be sold. What remains with you? The last lot, that is 200 units purchased. Is it right? So this basic knowledge we will keep in mind. FIFO method assumes that investment will be first sold out of opening lot and then first purchased is first sold. First in, first out. It is a very easy question. In this question you don't have brokerage also. So your life will be less miserable. It will be miserable but less. So write down books of name of this party, Calcutta Investment. Please write down neatly. One day you have to read your own notebook also. Okay. And then you write down investment account for the period from 1st April 2010 to 31st March 11. The name of security is 12% debenture. 12% debenture in Acme Limited. 12% debenture in Acme Limited. The interest due date in this question is also 30th June and 31st December. Face value is rupees 100 each. Face value is rupees 100 each. So what you will do, you will draw the format now And once your format is ready, please tell me yes. You will say yes so that I can prepare working notes. All of you write down neatly. Take a scale. If your notebook is small, you open the notebook fully. Debit side 6 column right on the left page, credit side 6 column right on the right hand side page. Is it over? Is it over? Tell me, is it over? Everybody, please draw the format. Is the format ready? Kirti is saying yes, Kunal yes, Govind yes, Rajendra Pawar, Kartikeya yes, format is ready, which means we are ready to solve this question. So, first, what I'll do, we'll write step 1, purchase and sale of investment. Purchase and sale of investment. Again, draw this format for purchase and sale of investment. Date, interest accrued. Under that, 3 columns. This will help you a lot. When you start revising, you'll find that you are understanding very fast. But practice is required. From to number of months. Then face value. 3 columns, X interest, interest at the rate of 12%, Sumit has done, come interest. Okay, Chaurasia has done. This format, step 1, is this ready? Yes. So write down purchase. There are two purchase transaction. There are two purchase transaction. 1st June, 1st June 2010. And the interest due dates are 30th June and 31st December. So if interest due date is 30th June and 31st December, interest will accrue from 1st January 2010 to 1st June 2010, 5 months. When you have purchased 200 debenture, 200 into 100, 20,000. You have purchased this 200 debenture for come interest 21,400. Directly write in last column, come interest 21,400. Please tell me interest on 20,000 at 12% for 5 months. 20,000 into 12% into 5 by 12 into 5 by 12. So that comes to 1,000. Do the reverse working. Move backward. Minus 1,000. Minus 1,000. So your X interest price will be 20,400. Your X interest price will be 2,400. Now you will see below, in the fourth line they have written on 30th November 2010, you have purchased another 200 debenture. You have purchased 200 debenture. So 20,000. So this interest will accrue from 1st July, because up to 30th June interest is paid. 1st July to 30th November 2010. This comes to 5 months. And these debentures were purchased ex interest. Follow the question. Fourth line. Fourth line in the question. 19,200. So interest this time will also be 1,000 rupees, because principal is 20,000. Number of month is 5. 1,000. Come interest price will be 20,200. 20,200 add. X interest plus interest is come interest. Okay, come to sale. In question third line, on 1st November 2010, third line, 300 debentures were sold. 300 means 30,000 rupee is the face value. Interest will accrue from 1/7/10 to 1/11/10, and that is 4 months. That is 4 months. Sakshi is right. Jatin is right. What about others? And what was the price sold ex interest? 28,650. Question is in front of you. 28,650. Calculate interest on 30,000 into 12% into 4 by 12 into 4 by 12. 1,200 rupees. 1,200 rupees is right. And then when you add it, you'll get 29,850. 29,850. Next, sale is fourth and fifth line of the question. 31st December, fourth and fifth line, 2010. 300 debentures are sold for come interest price of 32,250. This is given 32,250. Interest will accrue from 1/7/10 to 31/12/10, 6 months. On 30,000, 30,000 into 12% into 6 by 12, that is 1,800. Do reverse working and tell me the ex interest amount. Tell me the ex interest amount. 32,250 minus 1,800. 30,450. 30,450. Kunal is right. Govind is right. Jayashri, Sakshi, Rajendra Pawar, you are right. Karthikeya, right. Jatin, Kirti. Step 2 is interest received on investment. So the date we will receive the interest will be 30th June 2010, and the other date will be 31st December 2010. The number of months will be 6 months. Face value you have to tell me. Opening investment is 40,000. 40,000 is there opening. Plus on the screen you purchase this 20,000 plus 20,000. So your investment on hand on 30th June, opening investment plus 20,000 is 60,000. Is 60,000. Interest rate is 12%. Interest rate is 12%. So 60,000 into 12% into 6 by 12. Into 6 by 12. Interest is 3,600. Very good. 30th June 2012. We have 40,000 in the beginning, plus purchase 20,000, plus purchase 20,000 minus sale 30,000 minus sale 30,000. So now we are left with how much interest we have now? We have only 20,000 left. 20,000. Check. So 20,000 into 12% into 6 by 12. That is 1200. That is 1200. You're right. 20,000 is the face value of investment left with us, and the interest received will be 1200 rupees. Next point is interest accrued on investment. Dear student, please tell me interest accrued on investment. Interest accrued on investment, we will have four columns: due date, number of months, face value, interest at the rate of 12%, interest at the rate of 12%, interest at the rate of 12%. Anybody? 1st April 2010, 1st April 2010, we have 40,000 rupees. Number of months 3. So you will have 40,000 into 12% into 3 by 12. 1200. And at the end of the year, we have 20,000 rupees remaining sold for 3 months. For 3 months, interest will be 600 rupees. For 3 months, the interest will be 600 rupees. This is interest accrued. This is interest accrued. Now write down step number 4, valuation of closing investment. Valuation of closing investment. Point A, write down cost. Cost will be calculated using FIFO method. Cost will be calculated using FIFO method. Once again understand, we have opening balance 400, purchase 200, purchase 200, and we have two sale transaction of 300 each. So first it will go out of this lot. Another 300 sold, 100 will be deducted from here and 200 will be deducted from here. This does not exist now. Only the last lot purchased exists. Only the last lot purchase exists. Okay? So therefore write down out of purchases made on 30th November 2010 is equal to rupees. Let us see what was the cost. Can you see this 19,200 here? 19,200. And what is the market value? The market value will be 200 units left into market value is equal to 100 rupees given in the last line. given in the last line. That comes to rupees 20,000. That comes to rupees 20,000. Therefore, therefore, investment will be valued at lower of the two, that is rupees 19,200. That is rupees 19,200. That is rupees 19,200. Now one more working note, write down. Working note 5, profit or loss on sale of investment. 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 So we will first try to calculate the profit or loss. So write down first column, write down date, sale value, cost, write down. Under cost, write down source and calculation, and then write down profit. Then write down profit. Calculation column little bigger, so that if anything we have to compute, we can do it. Cost is based on FIFO. Cost is based on FIFO. So first in, first out. First in, first out. Okay. So date, write down date of sale. First sale took place on 1/11/10, and the sale value was 28650 x interest amount 28650. Cost source will be opening balance. This will be out of the opening balance, and there is opening balance is equal to opening balance cost is equal to 300 into opening investment cost is 50,000 and divide by opening quantity is 400. So this is the proportionate cost. Total 400 units are there in the opening balance. Total 400 units are there in the opening balance. We have sold only 300 out of it. So my cost will also be proportionate. So how much is that? That is 37,500. That is 37,500. And then we have sold on next date was 31/12/10. 31/12/10, and the balance or the amount at which it is sold is on the screen, sale 30450. 30450. Source is opening balance and purchase, and purchased on 1st June. Opening balance 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 100 quantities left. 100 into 50,000 divided by 400. This is opening. And purchased on 1st June is total 200 quantity on the screen. 1st June total 200 quantity has been sold whose cost is 20,400 rupees. Can you see 20,400 rupees here? 20,400 rupees. Opening lot 100. Opening lot 100. And purchased. So give me this figure. Give me this figure. This is 12,500 plus 20,400. So this comes to 32,900. 32,900. 32,900. So profit is, oh, there is a loss. There is a profit oblique loss I have to write. Here my, okay, there is some presentation here. This is 37,500. So in the first case also we have a loss. In the first case also we have a loss 28,650. 28,650 minus 37,500. 28,650. Chat रुक गया. 28,650 minus 37,500. First case there is a loss of 8,850. And in second case 30,450. Selling price minus 32,900 cost price. So the loss is 2,450. The loss is 2,450. The loss is 2,450. The loss is 2,450. Is the answer right so far? Is the answer right so far? Now you are ready with all the working notes. Now you are ready with all the working notes. 2450 loss is right. Jai Shri, Jyoti Jha, Kunal, Sakshi, Shubham. Okay. So how did you find this question? Enjoyable or no? So yes sir, yes, we enjoyed this question. And now we have to prepare investment account. Now we have to prepare investment account. So please come to investment account. Please come to investment account and please follow my instruction. These are important questions. You can see they are coming for 10 marks in the exam. Jai Shri is right. Start with opening date. 1st April 2010 to balance brought down 40,000 rupees face value, 400 into 100. 400 is the number of debenture and the question has given you cost is 50,000. This is given in the problem 50,000. Questions are enjoyable, very good. You have to do CA course, this is the syllabus, you have to follow it, like it or not. Otherwise, IPL auction will start soon, you can try there. Okay. Lot of Tiwari Sharmas are there, you can also try. Okay. Who told you to do CA course? This is your decision. Okay. And if you want entertainment, even web series are nowadays open for all such youngsters. Try there. Right. Play the role of Ramu Kaka. I have a serial coming soon. Interest accrued on opening balance. Working note 3, 1200 rupees. 1200 rupees. Working note 3 in bracket here. Working note 3. Next is, we'll pass entry for purchase on the debit side first. So you will help me. First purchase was made on 1610 to bank. Working note 1. Purchase. Face value was 20,000. Number 200. X interest amount on the screen. Working note 1, 2400 and interest 1000. 2400 and interest 1000 and interest 1000. Okay. There is one more purchase made on 30th November. 30th November 2010. And if anybody wants job, you can come to my office also. We have a vacancy. Okay. If you don't like CA course, you can work in my office as my typewriter. All these notes I need to type myself. I will hire you for 12,000 rupees for 2 months. Nalayak. I am not enjoying. Purchases. Working note to 30th November purchase 19,200 and 1,000. 19,200 and 1,000. 20,000 is the face value 200. Okay. These are the two purchases. Let us come to credit side. Credit side we will first write down June 30. Second line credit side 30th June 2010 by bank. Interest received. Interest received. Go to working note number 2. On the screen I will take you to working note 2 below. 3600. 3600. Below write working note 2. Then we have two sale transaction also. We have two sale transaction also. First sale transaction was on 1st November. 1st November 10 by bank. Sale. And you have sold 300 units. 30,000 rupees face value. X interest amount on the screen sale 28,650 and interest is 1200. 28,650 this figure and interest is 1200. So write down 28,650 and 1200. Interest received is 3,600. Yes, this is 3,600. You are right. Face value is 30,000. You are right. Okay, now there is a loss on this. 11110 by P&L account. Loss on sale. Loss on sale working note 5 we have prepared. On the screen working note 5 below. Right side I am doing a tick mark here. 8850. 8850 is the loss. Can you see 8850? I will highlight it also. 8850. This is the loss. So transfer it to your investment account credit side 8850 working note 5. 8850 working note 5. And again there is a sale transaction on 31/12/10 by bank 30,300. Let us go to working note number 1 again on the screen. 30,450 is the ex interest selling price and 1800 is the interest amount. So we are going to first write down 30450, 30450 and 1800. Write in bracket working note 1, working note 1. And then on the same date, we have to pass one entry for sale also, by entry for loss also, by P&L account, loss on sale. You will go to working note 5. You will go to working note 5. This is the working note 5 extreme end, right side, 2450. Check this, 2450 loss, 2450 loss. Got it? 2450 loss. So you write down here in the amount column 2450. Working note 5. Presentation is important. Later on, you should not get confused. Then on 31st December 10, you have by bank interest received. Interest received is working note 2. Interest received is working note 2. Let me check below. Below, working note 2 below, you can see 1200 rupees. This is the interest received on 31st of December. So we will write interest received 1200, working note 2. Then we'll come to 31st March 11, by interest accrued, working note number 3. Somebody said 600 rupees. Let me check on the screen. Yes, Govind Thakur, you are right. 600 rupees on the screen at the top right side. 600 rupees. Interest accrued. Interest accrued 600 rupees. And then Kunal is right. 31,311 by balance carried down. Balance carried down, this is 20,000. This is 200. Closing investment working note 4. On the screen, working note 4. Working note 4, 19,200. Cost or market value, whichever is lower. We have followed FIFO method. Is right 19,200? So 19,200, you write here and write working note 4. Just one thing you have to do now on the debit side, 31st March 11 to P&L account, interest balance transferred. So take on your calculator 3600 plus 1200 plus 1800 plus 1200 plus 600 minus 1200, 1000. Give me the answer. Give me the answer. What is the amount to be transferred to P&L account? In interest column. Come on, dear student, fast. You are such a good student and today you are not replying. Let me also try myself because you are not replying. So it will be 3600 plus 1200 plus 1800 plus 1200 and plus 600 minus 1200 minus 1000, 5200. So the answer is 5200. Now just check whether the amount column is telling. Please tell me total of amount column on the debit side. 50,000 plus 20,400 plus 19,200 is 89,600. And on the credit side also it should tally 28650 plus 8850 plus 30450 plus 2450 and plus 19,208,9,600. 10 10 or 10 tallied. 89600. Yes, Sakshi, you are right. Govardhan Reddy, Jyoti Jha, right. Sanket Jain, right. This answer is over. This answer is over. Any query on this wonderful question? No query? Do you have a query? Please tell me. If there is no query, then we'll go to the next question. I will dictate you a note. Note. If investments are sold on if investments are sold on interest payment date, for example, in our question, for example, in our question, investment sold, for example, in our question, investment sold on 31st December. If investments are sold on interest payment date, first pass entry for sale of investment, first pass entry for sale of investment, then pass entry for interest received, then pass entry for interest received, then pass entry for interest received, then pass entry for interest received. Because this query comes sometimes, can we record interest first? Ideally, first sale, then record interest. Anyway, it will not affect your answer if you do the calculation correctly. But don't do interest adjustment in both sale also and interest received also, then it will be double counting. So if you have already considered the interest on sale, then don't consider it as interest received. Anyway, question number next now. If you see your book, there is a question number 10. So one more practice on debenture. One more practice on debenture. Question number 10. Student will pay attention. Jaipur Investment holds 1015% debenture of rupees 100 each in Udaipur Industries Limited as on 1st April 2010 at a cost of 1,05,000. Opening balance 1000 unit, face value 100, interest rate 15%, and the cost is 1,05,000. And the cost is 1,05,000. Interest is payable on 30th June and 31st December each year. So twice a year the interest is paid. On 1st May 2010 500 debentures are purchased. Opening quantity is 1000 plus 500 purchased, come interest basis at 53,500. On 1st November 600 debentures are sold. So just let me check what is the method FIFO. FIFO method means this 600 will be sold out of the opening lot. 600 will be sold out of the opening balance. On 30th November 10, 400 debentures are purchased plus 400. So purchase, sale at X interest amount 38,400. Then it says on 31st December, see again on 31st December, 400 debentures are sold. So I will sell it out of opening balance only. If I am following FIFO method, if I am following FIFO method, we have 1000 unit in the opening balance. First we sold 600, 400 were remaining. Again we sold 400. So opening balance will become 0 and these two lots will form part of closing investment balance. So investment purchased in this year will become closing investment. Opening investment has been sold. Opening investment has been sold. So prepare investment account and you have to follow FIFO method. You have to follow FIFO method and this question has not given us market value. So ignore market value. Just do the value on FIFO method basis only. Just do the valuation on FIFO method basis only. Okay. So dear students, very easy question, same to same problem, but still we are going to practice. Now we'll do it little fast. If you cooperate, we can do it in 5 to 10 minutes. Will you cooperate? Say yes. And after this, we are going to take a very different problem after this. So do it fast and enjoy a different problem after this. Please come to question number 10. Is the format ready? Is the format ready? Books of Jaipur Industries Limited. Investment is for the period from 1st April 2010 to 31st March 21. To 31st March 21, and the security is 15% debenture. Name of the security is 15% debenture. Interest due date is 30th June and 31st December. Face value is 100 rupees. Face value is 100 rupees. Pay attention. Okay, many questions we have to do. On shares also we will take many questions. So once you are thorough with all these questions, then you'll be confidently able to appear in the exam. Now you please write down working note 1, purchase and sale of investment. Purchase and sale of investment. In this question there is no brokerage. So write down date, interest accrued, under that 3 column from to number of months. Then write down face value. Then write down X interest. Then write interest at the rate of 15% per annum. Interest at the rate of 15% per annum. Last column come interest. Last column come interest. So draw this format. Quickly, draw this format. Is the format ready now? Is the format ready? Is the format ready? So only working note one format you will draw. There are two purchase and there are two sale transaction. So first you come to purchase. First you come to purchase. Under purchase you write down 1st May, 1st May 2010. 1st May 2010. 500 debentures are purchased. So 50,000 here face value. And it was purchased on come interest basis. So 53 500 here. Count the number of months from 1st January 10 to 1st May because interest payment date is 30th June and 31st December. So up to December the interest are already paid. So count January, February, March, April, 4 months. 50,000, 50,000 into 15%, 15% into 4 by 12. So that is how much? 50,000 into 15% into 4 by 12. So I'm getting 2,500. 2,500. Find out the X interest price. 53,500 minus 2,500. X interest amount is 51,000. Another lot is purchased on 30th November 2010. Interest is already paid up to 30th June. Interest meter will start from 1st July 10 to 30th November 10. July, August, September, October, November. 5 months. 5 months. And this was purchased on X interest basis 38,400. 38,400 X interest basis. And how many debentures were purchased? 400. 400 into 100, that is 40,000. Dear student, please tell me 40,000 into 15% into 5 by 12. How much is the interest? 2,500. So this will be 40,900. There are two sale transaction also. There are two sale transaction also. 11110. 11110 600 debentures are sold. 600 means 60,000 sold. X interest at 57,300. At 57,300. Jyoti Jha is right. Interest will accrue from 1st July 10 to 1st November 10, July, August, September, October, 4 months. 4 months. So now you calculate 60,000 into 50%, 15 into 15% into 4 by 12, into 4 by 12, into 4 by 12. So that comes to 3,000 rupees. Add 3,000. So that will be 60,300. And there is one more sale transaction, last two lines of the question. On 31st December 2010, 400 debenture, 400 means 40,000 face value, are sold come interest means last column 55,000. So dear student, compute the interest accrued. This time the interest will accrue for 6 months, from 1st July to 31st December. Jyoti Jha is right. So tell me, 40,000 into 15% into 6 by 12 is how much? 3,000. So do the backward working, reverse working, minus 3,000, you will get X interest amount 52,000. You will get that X interest amount 52,000. Is it right now? 3,000 is right. 52,000 is right. Interest received on investment. Step number 2, interest received on investment. Shubham Gorana is right. Sakshi Kartikeya right. Kirti right. So please write down interest received. There are two dates in this question: 30th June, 31st December. Number of months will be 6 and 6. Face value will be face value will be already in the opening balance we have 1 lakh rupees opening, and plus you have purchased this 50,000, this 50 before 30th June. Before 30th June, this 50,000 was purchased. So that also I will consider. So I have 1 lakh 50,000. 1 lakh 50,000 into 15% into 6 by 12. 11250. 11250. Then we have on 31st December, I have 1 lakh opening balance plus 50,000 plus 40,000 minus 60,000 and minus 40,000. These two items we have sold also. So how much is that equal to? Closing balance is 90,000 rupees. 90,000 multiplied by 15% into 6 by 12. 6750. 6750. Yes, Jayashri, you are right. Sakshi, you are right. Jyoti Jha, right. Tanya, right. 6750. Working note 3, write down interest accrued on investment. Interest accrued on investment due date will be 1/4/2010 and 31st March 10 and 31st March 10. Number of months will be 3. Which 3 months will be there? January to March 2010. Here also the number of months will be 3. This is 11. The 3 months which we are considering for interest accrual is January to March 2011. Opening face value is 1 lakh, no problem. And closing balance 90,000. We have calculated in working note 2, because after that sale transaction, there was no further transaction. Do you agree? Now 1 lakh into 15% into 3 by 12. 1 lakh into 15% into 3 by 12. 374050. 3750, and 90,000 into 15% into 3 by 12 is 3375. 3375. 3750. Most of you are getting it right. Now we'll come to step number 4. Profit or loss on sale of investment. Profit or loss on sale of investment. Profit or loss on sale of investment. So write down a small table: date of sale, quantity sold, sale value, cost. Under cost, we will write down source. Cost is based on FIFO. Then calculation, and then we will calculate in the last column profit or loss. Date of sale is 1st November 2010. First sale took place on 1st November 2010, and the quantity sold was 600. The quantity sold was 600. Sale value, we will take X interest amount. Go to previous working note. Sale value X interest amount is 57,300. 57,300. X interest amount, sale value 57,300. Source will be opening balance. Source is opening balance. So 600 into opening balance investment is cost is 1,05,000 and opening quantity is 100, sorry, 1,000. Opening quantity is 1,000 and opening total cost is 1,05,000. So can we not calculate the proportionate amount? Can we not calculate the proportionate amount? Come on. What is the proportionate amount? 63,000. 63,000. Very good. Opening balance is the source. If you are following FIFO method, then first in, first out. This 600 quantity will be first sold out of the opening balance. There is a loss here. There is a loss here because sale value is less, cost is more. So the answer is loss of how much is this? 3 and something. 5700 in bracket loss. 5700 loss. And there is another lot which was sold on 31/12/10. Last two line of the question. 400 units were sold. What is the X interest amount on the screen? Working note 1, 52,000 rupees. 52,000 rupees is the cost, sorry, uh, sale value. 52,000 is the sale value. So we'll write here 52,000. If you want to write source, source is working note 1. Here, source of investment sold is again opening balance because opening balance has 1,000 quantity. So you have sold 600 earlier, now 400. Calculation will be same. 400 into 1,05,000 divide by 1,000 is equal to is equal to 42,000. This time there is a profit of 10,000. Previous one there is a loss. Previous one there is a loss. Tanya is right. Kunal is right. 52,000 minus 42, 10,000 is the profit. 10,000 is the profit. One last working note. Step number 5. Value of closing investment. Method FIFO. Method FIFO. Right hand side rupees. A. Out of purchases made on. There are two purchases made which are in the closing stock. Out of purchases made on 1st May 2010. Out of purchase made on 1st May 2010 on the screen 51,000 rupees. 51,000 rupees. This is still in the closing balance. And B, write down out of purchases made on the second lot was purchased on 30th November and the X interest amount is 38,400. Out of purchases made on 30th November 10. So not total. Total is 51,000 and plus 38,400 is 89,400. There is no market price given. Note, market price is not given. Market price is not given. So what is not given, ignore. What is given, based on that, do the calculation. So now we are ready to solve this wonderful question number 10. So I hope you are enjoying this chapter. Very intensive question. Student should be good with numbers. So we will come to main page. And if you cooperate, give me answer fast, then I can do it very fast. Okay. So first we'll come to debit side. 1st April 10 to balance brought down. Face value 1 lakh. Quantity 1000. Amount 1 lakh 5,000. 1st April 10 to interest accrued, we'll go to working note 3 at the top right hand side corner. 3750. 3750. Here working note 3. Then we have made two purchases. We'll write down that 1510 to bank purchase. Working note 1. So we have purchased, how many units we have purchased? You see 50,000 and the X interest price is 51,000. Interest is 2,500. So 50,000, quantity 500, X interest amount 51,000, and the interest was 2500. Very good. November 30. 30th November 10, to bank purchase working note 1. Let us go to working note 1 again. 40,000 is face value, 38,400 is X interest amount, and 2500 is interest. So right here 40,000, 400, 38,400, 2,500. This is right. Then come to credit side. Credit side 30th June 10, buy bank interest received. Go to working note 2. This is below working note 2, 11250. Working note 2. Then November 1, 1st November 2010, there is a sale entry. Check working note 1, there is a sale entry, sale. Working note 1. Working note 1. On the screen, 1st November, sale of 60,000, X interest 57,300, interest 3,000. So these figures you will write in the answer. 57,300, this 3,000. So come with me to this credit side. Face value 60,000, quantity 600, 57,300, 3,000. And there is a loss also on this sale. Working note number 4 on the screen. You will find 5700 credit, last right side you see 5700 loss. So you simultaneously write down here 11110 by P&L account, loss on sale, 5700, loss on sale 5700. Then there is one more sale transaction on 31/12/10, buy bank sale, working note 1. You have sold 40,000 rupees face value, 400 is the quantity. And then if you see on the screen 52,000 and 3,000. So write down 52,000 in the amount column, X interest amount, and 3,000 here. On 31/12/10, buy bank interest received. You will go to working note 2. You will go to working note 2 for interest received 6750. 6750, working note 2. Then you will write on the debit side profit we have not written. 31/12, 31/12/10 to P&L account, profit on sale, working note 4. Profit on sale was how much? Let me check working note 4. Working note 4, 10,000 rupees you can see on the right side. 10,000 rupees profit. Up to 31st December we have done all entries. Now 31st March 11, by interest accrued. Working note 3 you have to go and check. On working note 3 at the top, can you see 3375? 3375? 3375. Then 31st March 11, by balance carried down. So if you balance it now, face value is 9000, quantity is 900, and the amount you have to take from working note 5, closing investment. What was the closing investment in working note 5? Let me check in the last line on the screen. 89,400. This 89,400 is the closing investment value. So right there, 89,400. And debit side, one last entry to P&L account, interest transferred. Can somebody tell me in the interest column what is the balance? Interest column, what is the balance? Interest column, what is the balance? Anybody interest column, what is the balance? Interest column, what is the balance? At this place, I need to transfer balance in interest 18625. 18625. Now just check whether this amount column is tallying or not. So please take total of amount column, because it should also tally. It should also tally. So I request all of you to tell me amount column total. Amount column total. Amount column also we have to balance. Check if it is balancing on its own. So this comes to 2,04,400. And you try credit side also. Try credit side also. Yes, 2,04,400. Which means amount column is telling automatically if you do the calculations properly. 2,04,400. This is your complete answer. This way you have to present. Everything should be self-explanatory. All working notes should be prepared. So question number 10 is over. Now we'll go to question number 11. A different question now. Question number 11. Please come to next question number 11 printed below that. Question 11. Mr. Madhukant. Oh, Madhukant held 6% stock. 6% stock is the name of investment at rupees 102 on 1st January 2010, on which interest is payable half yearly on 30th June and 31st December, and is holding the investment on 1st January 2010. Interest rate is 6%. Face value is 100. Cost is 102 rupees. These are the basic info about this question. Now it says the following varies transaction in the same stock during the year ended 31/12/2010. So one good news first. Good news is that interest dates and year ending date is same. No interest accrued. No interest accrued because year ending date is also 31st December. Interest payment date is also 31st December. So enjoy, you have to prepare one working note less. So enjoy less working note. Now there are four transactions given to you. 1st March 10 bought 200 stock ex interest. 31st August sold 100 stock at 106 ex interest. 1st October bought 300 stock come interest 105. 30th November sold 200 stock come interest 107. Assuming brokerage at 0.25%. Brokerage is 1 by 4. 1 by 4 means 0.25%. 1 by 4% means 0.25%. Draw the investment account in the books of Mr. Madhukant. Calculate profit or loss sale on the basis of average cost on the date of sale. Oh my god. Previous 5 or 6 questions that we have solved, previous around 5 full-fledged questions we have solved were based on FIFO method. So I took all FIFO questions together. Now remaining questions are based on average cost. The remaining question I am going to solve are based on average cost. So this question is based on average cost, a new concept for you. Is it right? Ignore stamp duty and tax. Very good. Ignore stamp duty and tax. So what dear students will do, they will first draw this format. Okay. First draw format nicely. Take a scale, pencil, eraser. Books of Mr. Madhukant. Books of Mr. Madhukant. Investment account for the period from 1st January 2010 to 31/12/10. The security is 6% stock. Interest due dates are 30th June. Please follow instruction. Okay. Practice every day. So today you will try to practice all question on debentures and bonds. Today's homework is to practice all questions on debentures, bonds. So without fail, before sleeping, if required, don't sleep today and solve questions, practice all question again on debentures and bonds. So now write down face value. Face value, somebody will say is not given. But all numbers are close to 100 rupees. 102, 104, 106, 105, 107. So I can assume face value is rupees 100. Madhu is saying done. Madhu, this is your problem only. Madhu Kant's problem. Okay, Madhu? But you are not Kant. You are only Madhu. Arjun is also saying done. Wah, Arjun, wah. You must do. You are Arjun. Best player in this planet, on this planet Earth. Okay. So I hope everybody has done this. This question will not have interest accrued adjustment. This question will not have interest accrued adjustment. so you can enjoy. At least one working note will be less, but some working notes will increase also, because in this question we have to compute the average cost. At least opening balance we can write 1st January 2010 to balance brought down. Madhukant has 100 units. Face value is also 100. 100 into 100, 10,000. And the cost is 102 rupees. So 100 into 102, 10,200. No interest accrued. No interest accrued. This is what I can write from the first line. But then for other calculations, I need working notes. Dear student, please prepare working note number 1. Please prepare working note number 1. Draw the format of working note 1, everyone. Everybody, working note 1 format. Again, the problem of brokerage has come. Again, same instruction. Instruction number 1, assume brokerage is on X interest price. Instruction number 2, when you purchase the investment, add brokerage to X interest price. And instruction number 3, when you sell investment, deduct brokerage from X interest price. So net amount will be equal to X interest price plus minus brokerage. I need 10 columns. Have you drawn the first working note? Please let me know. Have you drawn the first working note? Then we can start. Okay, most of you are saying we have done the first working note. First, write down purchases. Question is very clear. They have nicely given you purchase date 1st March 2010. Interest due dates are 30th June and 31st December. So up to 31st December interest has been paid. Interest will start accruing again from 1st January 2010 to 1st March 10, 2 months. 2 months only. January and February. Do not take March. Quantity is 200 unit. 200 into 100, 20,000. This is purchased on X interest basis. So take 200 into 104. 200 into 104 is 20,800. Take interest at the rate of 6% on 20,000. 20,000 into 6%. 20,000 into 6% into 6 by 12. 20,000 into 6% into 6 by 12. How much is the interest? Interest is 200. Come interest price is 21,000. Come interest price is 21,000. Come interest price is 21,000. Brokerage will be on X interest 28,400 into 0.25%. Type 28 type 20,800 into 0.25%. 2,800 into 0.25%. 52 rupees. 52 rupees. So investment will be capitalized in the books at 2,800 plus 52. So that is 20,852. That is 20,852. One more purchase was on 11010. 11010. There is a purchase. Interest will accrue from 1st July. Interest will accrue from 1st July 10 to 1st October 10. July, August, September. That is 3 months. July, August, September, 3 months. July, August, September, 3 months. And the quantity bought is 300. 300 into 100. 300 into 100 is 30,000. Now this time it was purchased on come interest basis at 105. So in come interest column, you will write down 300 into 105. 300 into 105 is 31,500. 31,500 is 31,500. 31,500. Calculate the interest on 30,000 at 6% into 3 by 12. So the interest amount is 450. Do reverse working. Find out x interest amount. Find out x interest amount. Find out x interest amount is 31,050. And then on 31,050 multiply by 0.25% into 0.25%. So you will get 77.625. Please round off. Round off to 78 rupees. Round off to 78 rupees. And then it will become 78 plus 31050. 31128. 31128. 31128. 31128. Yes, Govind is right. Sakshi is right. Come to sale transaction. There are two sale transaction. 31st August 10, you have sold 100 units. 100 into 100, 10,000, and sold X interest at 106. 100 into 106, 10,600. Interest will start accruing from 1st July 10 to 31/8/10, that is 2 months. So you will take 10,000 into 6% into 2 divided by 12. So it comes to 100 rupees. Come interest 700. On 10,600, you multiply by 25.25%. You multiplied by 0.25%. So you will get brokerage 27 in bracket. 10,600 minus 27 is going to give you net amount received 10,573. Net amount received. Moonrise Chaurasia is right. And one more sale took place on 30th November 10. You see the question last line. Sold 200 units. 200 into 100, 20,000 at 107. 200 into 107. This was sold on cum interest basis. So in cum interest column write 200 into 107. 200 into 107, you will get 21,400. 21,400. Jai Shri is right. Tanga Lakshmi Surya is right. What about the interest on 20,000? So we will calculate first interest accrued. Interest will accrue from 1st July to 30th November 10, which is 5 months. Take 20,000 into 6%. 20,000 into 6% into 5 divided by 12. That is 500 rupees the interest. 500 is the interest. 21,400 minus 500 is going to give you X interest amount. Kartikeya is right. Anga Lakshmi is right. And on X interest amount, you will take 0.25%, which is rounded off 52. X interest minus 52. X interest price 2,900 minus 52 is going to give you net amount realized. Is going to give you net amount realized. 20848. 20848. Just check this last calculation. 20848 is right. When you sell, brokerage is deducted. Round off 20848. Step number 2. Step number 2 you write down interest received. Interest received on investment. Interest received on investment. So there will be two due dates on which we are going to receive the interest. 30th June 10, 31/12/10. Number of months will be 6 and 6. Number of months will be 6 and 6. What about the face value? What about the face value? So we have an opening balance of 1 lakh 10,000 here. Opening balance of 10,000, and plus we purchased before 30th June one more lot of 20,000. So we have 30,000 rupees face value. 30,000 into 6% into 6 by 12 into 6 by 12. 30,000 into 6% into 6 by 12. Is it 900? And 31st December we will write like this. We have 10,000 opening, purchase 20,000 plus another lot purchase 30,000, and we have sold 10,000 and we have sold 20,000. So this will give me 10 plus 20 plus 30, 60 minus 10, 50 minus 20 is 30,000. So at the end of the year we have investment of 30,000 rupees. 30,000 into 6% into 6 by 12, again 900. Again 900. Is the answer right? 900, 900? Yes. In this question, there is no interest accrued. So enjoy. Working note 3 is not required. Working note 3 is not required. But we have to calculate the average cost per unit. We have to calculate the average cost per unit. So write down step 3. Valuation of closing investment. Shubham Gaurana is right. Chaurasia is right. Valuation of closing investment. Yes, Chaurasia, where do you stay? I have heard that you stay in Bihar. Is it right? Moonrise Chaurasia. Okay. So valuation of closing investment, write down. Basis, write down. Average cost. Average cost method. Average cost method. Average rate per unit is equal to quantity in stock into rate applicable to stock plus quantity purchased into rate applicable to purchase upon opening quantity plus purchased quantity plus purchased quantity. Moonrise Chaurasia says, recently I am living in Kathmandu. If you are living in Kathmandu recently, then where were you before that? So come to formula. In your costing, you have studied this formula is also written as N1R1 plus N2R2 plus N1 plus upon N1 plus N2 upon N1 plus N2. This is the formula you have studied in school mathematics also. This is called weighted average rate. This is the formula for weighted average rate. Okay. This is the formula for weighted average rate. Note, write down. Weighted average rate will change whenever new purchases are made. New purchases are made. Whenever new purchases are made. Second thing you should know that average rate will not change. Average rate will not change when sales are made. When sales are made. Because we are calculating cost. So my cost per unit will change only when a new purchase is made. Cost per unit will change only when new purchases are made. When sales are made, cost per unit will not change due to sale. Cost per unit will not change due to sale. Is it right now? Tell me yes. Is it right now? So now we'll draw a table, date, calculation, and average rate. Date calculation and average rate. Date calculation and average rate. We have an opening balance plus we have purchased on 1st March. So the moment I'll make a purchase on 1st March, my average rate will change. My opening balance is 10,200. Can you see 10,200? So before we made fresh purchase, I had inventory of or investment of 10,200. Plus I purchase inventory whose cost is on the screen 20,842, 852. So 10,200 plus 20,852. On which date? On 1st March 2010. Divide by 100 quantity plus 200 quantity. Now in this formula, this 10,200 already we have multiplied opening stock into opening rate, and this also we have already multiplied 200 into X interest price and brokerage. So we don't have to again do calculation. 20,852 is the product of quantity and rate both. Denominator we have 100 plus 200. So take your calculator and find out the average rate. When you made a purchase, your average rate will be 10,200 plus 20852 divide by 300 quantity. So 103.5067. 103 103.5067. This was the rate when you purchased on 1st March. Basic mathematics, if you know, it will be helpful. Then another lot was purchased on 1st October. Understand? 1st October 2010. 1st October 2010. How many units do we have in the stock? How many units do we have in the stock before the purchase? So please follow my instruction. We have an opening stock of 100 unit here. Take 100 on calculator. Plus we had purchased 200 units here. Plus we have purchased 200 units on 1st March. 100 plus 200. But before 1st October, can we see here we have sold 100 units on 31st August. So we have basically 100 plus 200 minus 100. This is the quantity we are holding on the date of new purchase, that is 1st October. 200 quantity we have, and this will be multiplied by this rate 103.5067. This is the N1 R1. 100 plus 200 minus 300 is the quantity when you purchased already in hand, and this was the rate applicable for that quantity 103.5067. Okay, so this you put in one bracket, and plus you have purchased this 300 quantity here, 300 quantity whose cost is 31,128, whose cost is 31,128, whose cost is 31,128, and divide by 200 quantity in hand plus 300 quantity purchased. So now the task is for you to compute the average rate. 200 into 103.5067 plus 31,128 equal to, divide by total quantity in denominator is 500. So that comes to 103.6587. 6587. You can round off if you want to 65 or 66. No problem. No problem. You can round off in two digits. This is how average rates are calculated. When you make fresh purchase, because the new purchase may be at a different rate, your average cost will change. When you make the sale, do not calculate the weighted average rate, because your weighted average rate or cost will be same. Selling the quantity of inventory does not affect the cost per unit. You can try as homework, cost per unit will not change. So what we have calculated is only the rate. After 1st October, there was no fresh purchases. So your average cost till the end of the year will remain 103.6587. Is it right now? How many units we have in hand at the end of the year? 300. Quantity in closing stock is 300. How did you get 300? Try on your calculator. 100 plus 200 plus 300 minus 100 minus 200. So that is 300 units are there in hand. So please write down below this working, write down therefore value of closing investment. 300 units we have. 300 units we have, and multiply by this rate 103.6587. So multiply and give me the answer. So this is your 31098. 31098. 31098. That was your closing investment value. This is called weighted average rate. This is called weighted average rate. Working note number 4 now. Profit or loss on sale of investment. Profit or loss on sale of investment. Date of sale. Quantity sold. Sales. Then cost. Under cost we will write down average rate. Average rate on date of sale. Average rate on the date of sale, and then we'll get the cost, and then we'll get the profit. Date of sale, quantity sold, sales, cost. Under cost we will calculate average rate on date of sale, then total cost, and last column profit. So you will write down column number A, column number B, column number C, D, E. Column number E will be B into D, quantity into rate. Quantity into rate. And profit will be equal to column number F, C minus E. C minus E. C minus E. C minus E. Date of sale. There are two dates of sale in this question. One is 31/8/10. 31/8/10. The quantity sold is 100. Sale value we will take working note 1 figure on the screen. This figure we will take 10,573. 10,573. You can write here source working note 1. 10,573. 10,573. And what was the average rate on this date? What was the average rate on 31st August? Average cost or rate. So I will have to go to previous working note. 1st March we had calculated the rate 103.5067. Okay, listen to me. Next date is 1st October. Unless I make the fresh purchase, my rate will continue. Unless I make the first new purchase, my rate will continue. New lot was purchased on 1st October. Investments were sold on 31st August. So the rate applicable will be this rate 103.5067. 103.5067. This will come from working note 3. Multiply now 100 into 103.5067. So this I can round off as 10351. 10351. So my profit is column number C minus column number E, 10,573 minus 10,351. So that comes to 222. Everybody agreed? Any query on this? Any query on this? You have to learn to solve such question because they are asking such questions in the exam. I am not here for your entertainment. Knowledge itself is the biggest entertainment. More you learn, more you will have that hunger for learning. Complex question when you solve, you feel very enjoyable. What is the next date of sale? One line blank and write 30th November 2010. Sold 200 units. Go to working note 1 for checking the X interest amount after paying brokerage 20848. 20848, can you see in the last column? 20848. Now, what is the average cost per unit on this date? What is the average cost per unit on this date? So I will go to working note 3 again. What is this date written here? 30th November. If I go to working note 1, on 1st October we made a purchase. The rate was 103.6587. After that there was no fresh purchase. After this there is no purchase, and if there is no purchase, the rate will remain 103.6587. 103.6587. Time to use calculator. Time to use calculator. Enjoy your learning. Nothing is more enjoyable than this. Just try for a few days. So this calculation, multiply these two columns. This will give me cost of inventory sold, investment sold. Round off it to the nearest rupees 20732. Very good, Sakshi Madhu. And now you tell me profit or loss. Tell me profit or loss. That is a profit of 116 rupees. Sanket Moonrise Chaurasia, you are right. Okay. These are the working notes. Anybody, any query on this? I will wait for your queries, and if you don't have queries, then we can solve it now. Working notes are ready. This is a very good way of learning. These are the working notes done. Now just put this in this format. First we'll go to debit side, write the purchases. Write the purchases on the debit side. 1st March 10, 1st March 10 to bank, purchase, working note 1, quantity purchase 200, face value 20,000. Here we have to write X interest amount, this last column figure 20852 and interest 200. 20852, interest 200. Then one more purchase was made on 11010. 11010 to bank, purchase, working note 1 again. Now you have purchased 300 quantity. 30,000 is the face value, and the amount is on the screen last column 31128, and 450 is the interest. 31128 and 450 is the interest. And 450 is the interest. Now come to the credit side. We have to write interest received 30th June 10 by bank. Interest received. Interest received. Go to working note number 2 on the screen below. Working note 2, 900 rupees interest received. In bracket working note 2. You should keep one line gap and then write the next entry. One or two lines blank and then next entry. This will keep your notebook neat and clean. And then we have a sale entry here on 31st August 10 by bank, sale. You look at your question book, 100 units were sold, face value 10,000, and for amount you'll have to go to working note 1, last column. Working note 1, last column, can you see 10,573 last column, and interest is 100. 10,573 and interest is 100. And one more sale happened, but there was a profit or loss on this. So let me check profit or loss. Oh, there is a profit, 222. So what I'll do, I will also simultaneously write the entry for profit on 31st August 10 to P&L account, profit on sale, working note 4, triple two, profit on sale triple two. Then we have one more sale entry on November 30. 30th November 10 by bank, sale, working note 1. You have sold 200 units, face value 20,000. For amount, go to last column of working note 1. On the screen, last column of working note 1, 20848. 20848, interest is 500. 20848 and interest is 500. And there is a profit on this also. So on the debit side, 30 11 10 to P&L account, profit on sale that we have already calculated is 116. working note 4, 116, working note 4. Then there is one interest received on 31/12/10 by bank, interest received. Go to working note 2 below, on the screen below, 900 rupees. 900. Working note 2. No interest accrued entry. Directly now we'll write down 31/12/10. This is the year ending date. This question year ending date is December. By balance carried down. So I will first balance the face value column, 30,000. Quantity 300. And this we have prepared one working note 3 for closing investment purpose. What is the closing investment in working note 3? Anyone, any answer? What is the closing investment in working note 3? This one, 31098. 31098. So 31098 is the closing investment value. Madhu is right, Sonam right, Sakshi right, Jayashri is right. Only lady students are answering. Where have gent students gone? Have they gone back to Kathmandu or Anantapur? Kunal is right. Thonga Lakshmi. Surya right. Rajendra Pawar. One more thing I have to do. On 31/12/10 to P&L account, I have to transfer this interest balance to P&L account. So who will give me the answer first and correct? How much interest we are going to transfer? Take 900 plus 100 plus 500 plus 900 minus 200 and minus 450. How much interest will be transferred? Reddy, Pratap Reddy is from Guntur. Very good. VA Creation is from Calicut. So everybody will tell me you are from which place. P&L account 1750. Write down here 1750. Most of you got it right. Amazing. Mohammed Saklen 1750. Now just check whether amount column is tallying or not. So amount column, please take on your calculator. I am going to highlight it. 10,200, 2852, 31,128 plus 222 plus 116. And on the credit side, you add this 10,573, 20848 and 31098. So who will give me the total of amount column? Thanga Lakshmi is from Tirunelveli. Sanket is from Pune only. Then why don't you come to the class only? You are so lazy you can't get up and come to the class where we are doing recording. Govind Thakur is from West Bengal. Pawar is from Jalna. Okay, so the total you are saying 62519. 62519. Plus minus 1 rupee is okay. Plus minus 1 rupee is okay. Falak Mehta is from India. So sad. I think you are from Jupiter. Lakshna Ramesh is from Chennai. Prithvi Neelam is from Warangal. Sakshi is from Shirdi. MG Vijay Kumar, Anantapur, Andhra Pradesh. Oh, This is a good place. The whole of the country is sitting together. Tarun Soni is from Amravati. Farhan Ajam is from Jupiter. Prayag Raj. Karthik is from Prayagraj. Oh, Modi ji's constituency. Kirti is from Uti. Saklan is from Odisha. Jayashree is from Bangalore. But first tell me whether your answer is telling or not. Is the answer telling? Lucky Agarwal is Haryana. Madhu is Tamil Nadu. Thanga Lakshmi is also Tamil Nadu. Tallied. Okay, so this is the answer of this question. Any query on this question? Any query on this question? Any query on this question? Just check all of you. Do you have a query? So, with this answer is over. See you tomorrow at the same time. Thank you very much. All the best. Enjoy your day and practice all other questions on debt securities. Okay, don't sleep. Trust me, you'll get very good marks in accounts. Thank you very much. See you. Bye bye.